Imagine a giant facing down the government, its whole structure on the line, and then it just walks away, stronger even. That's pretty much Alphabet this week. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into Alphabet, ticker GOOG. We're using our research from this morning, September 3rd, 2025, around 6:46 a.m. Eastern. And our mission, to figure out if this huge legal win gives the stock more runway for you.
Yeah, it's a really crucial moment. We're going to unpack it all, the big economic picture, Alphabet's own story, what traders are doing, and what the charts are suggesting.
Okay, let's start broad then, the macro scene. Pre-market today is, well, it's interesting. Tech is flying, NASDAQ futures are up nicely, but the Dow, kind of stuck in neutral. It feels like very selective optimism, doesn't it?
It really does. And what's kind of wild is you have this tech tailwind blowing right into what economists are calling like a macroeconomic hurricane watch. You've got Barclays, Moody's, they're talking stall state for the U.S. economy. Basically, growth has really slowed down. Some even say on the edge of recession, maybe a 50% chance in the next couple of years. And we've got jobs data, the Fed's beige book today, that could stir things up too. So yeah. Tech optimism meeting economic caution.
A storm Alphabet itself seems to have navigated brilliantly on the legal front anyway. Let's zoom in on that. Because while the economy's choppy, Alphabet just got through its own massive storm. The fundamental story here is huge. A federal judge basically said no to the Justice Department trying to break up the company. That multi-year threat, gone. Poof. Instead, Google just has to end a few exclusive deals. Feels like a real slap on the wrist, relatively speaking. Investors must be relieved.
Oh, hugely relieved. This fundamentally de-risks the company in a big way. That major threat, it's off the table now. But it's not just about dodging that bullet. The business itself is doing well. Think Waymo, their self-driving tech expanding into Seattle. That's progress. And Google Cloud just landed a massive $10 billion 6-year deal with Meta for AI models. That's a huge stamp of approval.
Okay, but here's where it gets tricky, maybe. The valuation. It's a bit of a puzzle. Our research shows one model, based on free cash flow, suggesting fair values maybe around $109, which, compared to the current price over $213, looks kind of steep. But another model, looking at earnings per share, suggests it could be worth over $511. That's a massive gap. How do you even square that? Meanwhile, Wall Street's almost all in, over 83% have buy or strong buy ratings.
Well, that gap tells a story, right? It suggests investors aren't just looking at today's cash flow, they're betting big on the future, especially in AI and cloud now that the regulatory fear is gone. It's a bit of a leap, sure, but those big deals like the Meta one, they back it up. The market's definitely focused on growth potential.
Right, makes sense. So the fundamentals look strong, legal overhang removed. How are traders actually playing this? Let's look at sentiment. The options market usually gives us a good feel for that.
And it's looking pretty optimistic, actually. The put-to-call ratio is down at 0.55. That means for every put option, a bet the price will fall, there are almost 2 call options bets the price will rise. So yeah, bullish tilt. Traders seem to see a ceiling around the $145 call strike and a floor near the $115 puts based on where the activity is, and almost nobody is betting against it short term. Short interest, super low, only 1.7 days to cover.
Wow, okay. So very little appetite to short it. The path of least resistance seems up, like you said. So what do the actual price charts, the technicals, tell us?
Well, the charts show a clear, strong uptrend. You see consistent higher highs, higher lows, pretty classic bull move, and the volume confirms it looks like accumulation, buyers stepping in.
Okay, sounds good, but is there any catch?
Just a small note of caution. Some momentum indicators are flashing. Let's call them yellow lights. It doesn't mean the trend is reversing, not at all, but it suggests the recent powerful move might be a little, overextended, like the stock might need to catch its breath, consolidate a bit before trying to push higher. Volatility's still there, showing an active trend.
All right, let's pull it all together then for today's playbook. We've got the macro caution, but then these huge fundamental wins, bullish sentiment, and a strong, maybe slightly stretched technical trend. Our research sums it up with a bullish outlook.
Yeah, I think that's right. That legal win, the de-risking, it's just such a powerful catalyst right now. It seems likely to overpower those wider economic jitters and the slightly tired technicals, at least in the near term. The market's really rethinking Alphabet's potential here.
So your game plan for today. The stock absolutely rocketed after hours, hitting near $226 pre-market. It's been hovering roughly between $222 and $225. Talks key levels you want to watch. Resistance is that after hours high, $229.90. First support level is the pre-market low, around $222.35. Below that, yesterday's close, $211.99, becomes a really big psychological floor. So for Alphabet, The judge gave a green light, the market seems all in, and the charts say the trend is your friend. But just remember, even giants get winded running uphill. Keep those levels handy, trade smart. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investments.